Welcome to the July 30th, 2018 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman president, McGowanGroup Asset Management. A fast-paced tour of the global financial markets, including investment strategy implications for investors. A quick 5 minutes designed to take you to the next level in decision making and understanding. First, this week, the top headlines: 4.1% GDP growth, an amazing number. That's the highest since 4 years ago, and it also was accelerated by the fact that the first quarter was revised upward. Technology in question got bifurcated this week. There was a huge correction in Facebook. Even though earnings were up 32%, the stock was pounded by 20% in a single day. What we're looking at here is the New York FANG Index, which includes Facebook, and you can see this tailing off. Could this have been a cap after a relentless rally that drove the returns in the overall equity market? We know it's a thin market, and that characteristic with Facebook's pounding this week. Twitter also reported zero profit growth, 2% revenue growth, and it was taken to the woodshed by a similar 15 to 20%. So the question becomes, tech has been the leader. Where do we go from here? This is the pipeline index. The appreciation accelerated this week. This is West Texas Intermediate crude approaching $70 a barrel at the highs of the week. And with the pipelines, the energy infrastructure, you can see a steady correlation. That's what we were looking for in the high cash flow allocations. Inflation-friendly energy infrastructure has been our theme since December. We waited 3 years for this category, and it appears that we have now moved into a nice capital gain opportunity, plus yields as high as 9%. This is the 30-year U.S. Treasury all the way back to 2015, a 3-year history. Notice as short rates have come up, this is the T-bill, which follows the Fed funds rate. We've got an August 1st meeting and a September 26th meeting announcement by the Fed. Bloomberg probabilities we covered last week. They're going to take the short rates to 2% in the September meeting. They're going to pause next week at August 1st. We'll see exactly what happens. But here is the conundrum for the Fed. Long rates have remained stable at about 3% after spiking to 3.2% post-election. You can see it here. What does that mean? Not much difference between this 2% and this 3%. But the difference being 30 years of duration, or 30 years of maturity. That's a long time to wait if this rate spikes. What does it mean for the rest of the fixed income markets? Federal Reserve sometime in the second half is likely to say at 2% overnight bank lending rate, or 2.25%, we're done for a while. The Fed Chair Powell, a businessman, actually worked for Carlyle, well aware that having pushed the prime rate to 5% from what was just 3% a year ago, that's a big increase in cost for business, and it may be a headwind that causes him to want to pause based on the fact that the long rates move the opposite direction. Okay, discount bonds. Right now, substantial discounts in high yield, especially global high yield. And what does this graph tell us? Convexity is our definition of the week. If you tune into the Long Play program or go to NetWorthRadio.com, you'll get more details on this concept. Basically, it says if yields fall on a discount bond, it'll go way up in value relative to other things. Further, it drops less in value for rate increases because of that discount. Bonds accrete towards par value if the issuer can pay, and what this says, there's lower risk if rates move up, higher opportunity if rates move down from discount bonds. If you want more details, simply go to NetWorthRadio.com. I'm Spencer McGowan, your financial weatherman. Thank you. Be sure to subscribe so that when there's fast-breaking market news, you'll get the update from your financial weatherman. Also, recommend us to your friends. Those that ask you about finance, let them educate themselves with a quick 5-minute, once-a-week video. Thank you for tuning in. We'll be back next week. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.